Hi everyone, welcome back to our channel. Adi here. So in today's video we are going to discuss about top 5 free small case which you can consider to invest now in the Indian stock market. So let's the video get started and discuss about it. So the first one is your all weather investing. So as it is named all weather investing, so it is like diversified to all category of investment like your equity, debt and gold. This is managed by Windmill Capital. So basically most of the free small case are managed by Windmill Capital. So if you see the allocation, equity is around 42%, in which if you see Nifty 50 or large cap is around 15%, your mid cap is around 27%, and debt there is allocation around 25%. Gold also 34%. So that's why the naming is all weather investing, because it diversified to 3 segment of investment. So what will happen, let's say your equity market goes down, the gold is there to minimize your damage your investment money. So here you can start investing. The minimum amount is around 3,800 as of today. So if you see 4-year CAGR, it is around lower side because it is expected, because there is debt and gold segment is there. So the CAGR is around 10.73%. If you see the rebalancing, it's quarterly rebalanced. So all the how much equity, gold or debt, it will be balanced. It will be done in each quarter. So pros, if you see, it is much more safer investment because it is diversified to different segment. So if the market goes down, even your gold and debt are there to safeguard your investment. Cons, as I told, that the return will be lower side. You can see 4 years 10.73%. So this is expected because the equity percentage allocation is not that high. So it is good for new and your conservative investor. So basically if you are a new investor to stock market, then you can start with this small case. So it will be, it will safeguard your investment. Similar for conservative investor, you should consider this small case for investing. So the second one is your equity and gold. So it is more like your all weather investing, but there is no here is no debt segment is here. So allocation is equity in 70%. All are in Nifty 50. You can see Nifty 50 BZTF, and gold is 30%. So you can start your investment around 292. So basically you can put more money, but this is the minimum investment you can start with. So if you see 4-year CAGR, it is way above than all weather investing, because there is debt percentage in all weather investing. Here there is no debt. So you can see a 15.56, which is good, because 16% around annualized return is good. Rebalancing, you can see it is quarterly as like your all weather investing. So pros, this is again the safer investment, because equity and gold, it will go, let's say equity goes down, then gold price will go up. So equity goes up, gold price will not expected to go up more. So it is more balanced one. So, and the second one is it is better return than your all weather investing. So obviously debt, as I mentioned, is not there. Cons, if you directly invest 100% in your equity, then you will get more return than this small case. So relatively low return than other small case, which is 100% allocation in equity. So this one is also good for new and conservative investor. Those are new to the market, or those are conservative, they don't want to take more risk. Then you can consider equity and gold and all weather investing. So the third one is your dividend aristocrat. So this is also managed by Windmill Capital. So here, why this small case? Because if whether you are holding a stocks, so once you sell it, you will get profit. But here these are giving good dividend stocks. So just by holding the stocks, you will get passive return of your investment as a part of your dividend. So if you see the equity is 100% in equity, you can see the good thing is around 67% are in large cap, and mid cap is 16.67, and small cap is also same. So if you see, 2/3 of its allocation are in large cap stocks. Minimum investment expected a bit higher side, because around 51,000, because 67% of its allocation large cap, so it is expected minimum investment is at a higher side. If you see the 7-year CAGR, it is very good. You can see 22% around. So constantly it is giving 22% around for last 7 years. If you see, the rebalancing is annual. So this one is bit cons, you can say. I already mentioned the cons part, because annual rebalancing, let's say it's a huge time gap. So you may not know which, let's say one stocks goes down forever and you wait for 1 year to rebalance, then it may never able to get back to that price which you have bought the stock. So this one is like a cons for me. And if you see pros, yeah, because you are holding good dividend stock, large cap stock, so you are getting passive income by just holding the stocks. And also it is less volatile compared to other small case, because more allocation is in large cap. 2/3 of it allocation in large cap, so it is less volatile than, let's say, your mid cap and small cap allocation is high. In that case it will be more volatile. And here you can see good past return around 22%, which is a very good constantly for last 7 years. And this is moderate and your aggressive investor, you can invest in this one, because this one is equity 100%, and this one is a good composition of stocks. So this one is a third one you can consider for investing. So the fourth one is your growth and income. So here we will have similarly dividend in our account, along with we will have growth stocks. So we will get more return when we sell those stocks, along with we have a passive income. So if you see equity 100%, but here if you see small cap, 2/3 of allocation is in small cap, and large cap very low 13%, mid cap is 20%. So minimum investment is around 54,132, which is bit higher side. But if you see the last 6-year CAGR annualized return 20%, which is very good. If you see rebalancing, it is quarterly, that is also good. It is not annually, so this one is also good. If you see the pros, this is also good, past return 20% for last 6 years constantly. And the second one, as I mentioned, you will have dividend paying stocks and your growth stocks. So you will have your passive income, and as it is a growth stock, it is expected to grow. The your stocks price will go up more. So you will have more return when you sell those one, along with your dividend in your account. The cons, it will be more volatile, because the small cap allocation is 2/3. So it is expected to more volatile. So when market goes down, it will be drop more compared to large cap or mid cap. So this one aggressive, those are aggressive investor, they should invest in this small case, not for a moderate or conservative investor. So the last one we are going to see is your house of Tata. So these are all Tata group of companies that is managed by Windmill Capital again. So if you see the allocation, large cap is around 75%, you can say 3/4 of its allocation in large cap, and mid cap around 26%. And there is no small cap allocation. That is another good thing, because it will be less volatile compared to other small case or portfolio. Minimum investment is reasonable, 16,000, 17,000 you can say. If you see last 2-year CAGR, it's around 29%, which is very huge considering the market situation. So it's very good. Rebalancing is quarterly, which is also a good thing. If you see the pros, there is no small cap stocks allocation, so that means that is less volatile compared to other small case. Good past return, because all the Tata group of companies has been good, giving good returns for last 2 to 3 years. So as I mentioned, holding mostly good large cap stocks. So cons, there is not much cons, but the one thing is it is limited to Tata group of companies. So it is only those Tata group of companies you are investing in this small case. Here it is good for moderate and aggressive investor, because moderate because large cap at 3/4 of allocation in large cap. So moderate investor can consider this to invest. So these are the 5 free small case you can consider to invest this year. So I will put all the small case link in the description, so you can go and check it out in the small case website or app. And if you're okay and good to go for investment, then you can invest in this small case. And before investing, check out which type of investor you are. According to that, you invest in that small case. And also you have to know the fees, because that will impact your annualized return and CAGR. So I have made already one video on the new fees. I'll put in the description and the I button, so you can go and check it out. So you'll know what are the fees you have to pay. That is going to generally impact your returns. So I hope this video is helpful to you, so you know which small case you need to invest. So please hit the like button and subscribe to the channel. So thank you everyone.